Hey soldiers, we're seeing an increase in the number of auto loan defaults and delinquencies. Part of the reason for this is cars are more expensive than ever. $728 on average for a car payment these days for a new car. Mid $500 per month for a used car. Now, these are averages we're talking about, so roughly half are paying more than that. That's pretty darned exorbitant. I remember when I got my first car payment for a 1994 red Toyota Tercel 4-door. We called it the Terkel. And that payment, and I thought it was a lot then, was like $125. I was fresh out of college, struggling, and that it might as well have been $1,000. But I did it. And there were some nights where I would hear the engine of a large vehicle, like a tow truck, and I would wake up because that car was key to my income because I worked 50 miles away from where I lived. Luckily, though, that never happened. Got to hold on to the car and moved up in the world. Things started to happen. But look, a lot of Americans are dealing with a situation where they could be separated from their vehicle due to the fact that the loans are so onerous and inflation is so outrageous thanks to government spending that people are spending more on the necessities of life and falling behind on some of the things like their car payments. Car payment defaults hit a 29-year high as borrowing costs surge. So understand, the price of the vehicle, those are going up. These American auto manufacturers have lost their minds. You've got pickup trucks starting at the mid $50,000 range, going all the way up past $100,000 for some of these pickup trucks. Pickup trucks, okay? When we're talking about cars that cost more than $100,000, I ain't thinking about no pickup truck. I'm thinking about a Ferrari or something like that. But it's true. You've got MSRPs on pickup trucks that are approaching half of a house payment, which is ridiculous. Inflation squeezed Americans are defaulting on their auto loans at levels not seen in nearly 3 decades as record high borrowing costs threaten to price many Americans out of the market. The percentage of subprime auto borrowers are at least 60 days past due on their loans rose to 6.11% in September, up from a previous high of 5.93% in January. This is according to Bloomberg, and they are citing Fitch, the ratings agency. So we're talking subprime here. What's that all about? Well, it's folks whose credit is not as stellar as they might want it to be, but they still need that vehicle. You don't live in New York City, so you don't have this ubiquitous mass transit system serving, all 5 boroughs. You need a car to get to work, and your credit's not that good, or you're just starting out and really don't have a credit history, so you might be listed as a subprime loan. And those loans are subject to a higher interest rate. So you put that higher interest rate on top of an already high interest rate environment, on top of vehicles that cost more than ever, and you can see the problem. For those with the best credit scores of at least 750, average interest rates are about 5.07% for a new car and 7.09% for a used one. That's according to Bankrate. Buyers with credit scores of less than 640, meanwhile, are looking at distressing interest rates of about 14.18% and 21.38% for new and used cars, respectively. That makes the case for getting your credit under control, raising that score, paying down that debt in order to get the best price on money. Check us out at mcenow.com/get debt free. If you got $10,000 or more in debt, look, we're partnered with Debt America. We can hook you up with a qualified debt resolution specialist who's going to help you get that credit under control so you can get out of that higher interest rate environment. Look at the difference in what folk are paying for cars, good credit versus not so good credit. It's exorbitant. Again, let me just reiterate here. 5.07% for a new car. That's the rate for folk with the 750 credit score. 14.18% for a new car for folk with 640 and below. That's major. That's major. September's delinquency rate is the highest seen since 1994, according to Fitch, which can be attributed to the Federal Reserve's decision to hike interest rates to its current 22-year high between 5.25 and 5.5%. Look, guys, these shenanigans, these machinations of the Fed with their monetary policy, we're going to see adjustments in the fiscal policy with regard to taxes from the president and Congress, no matter the party, okay? Guys, we got $33 trillion in debt. It's got to be paid somehow, and we are taxpayers, right? That's where they get it from. So these things that are going on, that are taking place, are putting many Americans at risk of being ruined financially. Can you imagine if you get your car repossessed and now you have no way to get to work? That would have been my position back in the day. I would have had no way to get to work because there was no mass transit going to the place where I worked, right? Which was, it was about 49 miles away. Fed officials unanimously decided to hold interest rates steady last month, the second pause in the 6 policy meetings central bankers have had so far this year, though they've signaled that another hike before year's end remains on the table. So look, one of the things I want to suggest is this. Guys, if you got a car and it is paid off or nearing the point where it will be paid off, look, put the maintenance, put the work into the car, keep it on the road for as long as you can. I'm speaking from experience, guys. Okay, we haven't bought a car in, about 5 years. And that car was a pre-owned vehicle. It's actually probably more than 5 years now. And look, I'll drive around in that car for as long as it runs. I don't care what people think of me. I care about the assets that I'm able to acquire with money I would otherwise be spending on a car payment, okay? A depreciating item. Keep that car on the road if you can. Now, if you're put in a position where you have to buy a car, well, do a heavy amount of math and look, don't swing for the fences unless they come out and say, we're going to stop making all new models of car. We're going to be like Cuba and we're just going to stop making new cars. Then, okay, maybe. They're not going to say that though. So don't feel like you're under any pressure to go out and put a lot of money into the black hole that is a car. If you need one, get one. But get it smart. Now, you could save some money getting a pre-owned car. That's the way I do it. Although the interest rates are higher, but if you got good credit, you could put yourself in a situation where even that works for you, right? So, guys, look, we got to be strategic about this stuff, and we're going to stay on it. I'll talk to you soon.